The virus contagion is pushing the stock market to new records, and they're all down. The ASX 200 has crashed below 6,000 points, the market's worst day since the global financial crisis. The top 200 stocks closed down a massive 7.3%. The horror day wiped $137 billion from the index and more than $400 billion over the past 3 weeks. The ASX is now on the brink of a bear market, shedding nearly 20% since the 20th of February and giving up all the gains of the past year. Energy stocks were smashed. The sector closed down 20% after Saudi Arabia slashed prices in what looks like becoming a full-scale price war against the Russians. And in a 20-minute flash crash, the Australian dollar slumped to 63 US cents before staging a recovery to above 65 US cents. US futures are pointing to more carnage, with Wall Street set to be clobbered another 5% overnight. I spoke to ANZ senior economist Felicity Emmett. Felicity Emmett, we're teetering on the edge of a crash here. The market down almost 20% since its record high just a couple of weeks ago. When you broaden that out, what do you see happening next?
Look, it's really hard to know. The market's obviously impacted today by a combination of the crash in the oil price as well as real fears about the impact of the coronavirus on economic activity. But the fall in the stock market then has its own impact. We're going to see that in confidence. We're going to see that in people who are looking at their superannuation balances and thinking about their retirement and thinking, well, I'm going to have to spend a lot less. So this market impact will have secondary impacts on the economy.
We've seen obviously the extent of that rout on equity markets in the last couple of weeks. The ASX, though, not the economy. So is the equivalent a recession in the economy?
Well, I think that's what there are fears of now, that this impact from the coronavirus will flow through into the second quarter and that we'll get another negative quarter. And certainly the risks are rising that will be the case. We're likely to have the travel ban extended for some time, and people will be cutting down on their discretionary spending. They might be stocking up on the staples, but they're not going to be going to the movies or spending a lot of extra money. And then businesses also will put off decisions to spend money, to invest and to hire.
So do you think that in a couple of months' time, you and I will be sitting here talking about the fact that we're in a recession?
There is, I think, an increasing chance is that we will be here in September talking about exactly that. But in the meantime, I think we'll be watching things like labour market numbers, watching to see what the unemployment rate does. And I think this is what the government is really quite concerned about, is that firms will start to lay off workers and then that impact on the economy just multiplies.
Now, of course, the huge falls that we've seen today have been triggered by that all-out oil price war. And I guess that's a signal of this rapidly cooling global economy that we're now seeing. How exposed is Australia to that?
Look, we're very exposed to the slowdown in demand in the global economy. Australia is a small, open economy. If people don't buy the things that we make or we dig out of the ground, or people choose not to come to Australia as tourists, then that does make a big difference to us. So Australia is probably a country that's much more exposed to this sort of slowdown in global growth than some other countries may be.
Of course, we're all waiting to hear from the Treasurer and what his stimulus package will include. What do you think should be included in it?
Well, we are all waiting for that, and it will be very important to see the size of it, to see if it's enough to offset some of these impacts. But I think the government is going to be looking at the sorts of things that will try to help really target what the problems are. So they're looking at wage subsidies to help keep incomes up. They're looking at business investment incentives, and that will help keep businesses spending.
What does it take for us to start talking about recovery, and what does that look like?
Look, I think it's really hard to have any concrete idea of that. The virus could go on for some time. The economic closures that we're seeing could go on for some time. We've seen in northern Italy, quite significant closures, and that will flow through to the global economy. The more of those that we see, the greater the impact on the economy. But this could go on for some time, where the virus hits different regions, you get different shutdowns, and then that continues to impact confidence and markets. So there is a growing sense that this is going to be a longer term shock than the initial feeling that it would be a short, sharp shock with a V-shaped recovery.
Felicity, Emmett, great to get your insights. Thank you.
Thank you.